Good afternoon and welcome to the 2025 M&A Forum. So I'm Hanna, Managing Director and co-founder at Taureau Group. Taureau is a middle market investment bank headquartered here in Milwaukee, Wisconsin. Today we're really excited. We have a fantastic panel. Very, very knowledgeable people who have great experience not only buying companies but selling companies. And they're here to share their experience, and we really appreciate it. We will be taking questions for the audience. We'll press Arthur back into service, and if you want to text him your questions, he'll ask it on your behalf. But what we'd like to do is start off with some introductions. You saw some formal introductions from Dan, but these four panelists all have really interesting personal stories. So I'm going to ask them to do a little 3 to 5 minute introduction of themselves and their M&A background. So Jerry, let's start with you.
Man, I got to start out first. I'm Jerry Voors from, I live in Muskego. My company was down in Elkhorn. For the past 30 years, I was president of Aero Sewing. Now, anybody who says they know, we make sewing and craft furniture. So for 30 years, I've had to answer the question is, what? So think of grandma's sewing cabinet. Remember where you opened up the top and the sewing machine came up through the middle? That's what we still make. And yes, people still sew. It's about an $11 billion industry in the United States for sewing. And in that little niche market, we're the largest provider of sewing and craft furniture in the world. So we've grown that over the past 30 years. We did that by focusing on our niche market, building value, and having a great team in order to put that together. Now, for the first 10 years or so, we kind of meandered around without a great rudder. About 2015, we put together a board of advisors that said, you know, if you ever want to retire, you better figure out what you're going to do. They helped us focus and pointed out the fact if we want to retire or sell, regardless of what we do, we got to have the team in place. We as the owners can't continue to do it. There's no value there then. So starting in 2015, we put together a great team of senior management. By 2019, we had determined that none of our kids were interested in taking over the business, and our management team was didn't have the resources in order to buy it, so we started that process of getting ready to sell. It took 5 years for us to go through that. We went through multiple brokers, we went through multiple attorneys, we went through multiple LOIs, 2 full rounds of due diligence. And ultimately, in November of 2023, a little over a year ago, we sold to private equity out of St. Louis. They retained me for a year, and I retired, as Dan said, in January. So I'm 2 months into this retirement thing, so it's very interesting. So from a show of hands out here, how many people are on the buying side like me? So not Old National, who will help you, or whoever, but who here in a business standpoint, sometime in the future, think they're going to be selling their business? Raise your hand. Okay? What's very, very interesting with Lisa and Kyle talking is all of their words as a business owner. I heard them before we went through the buying process, but I didn't get it. Now finally, at the end of it, when you talk about deal fatigue, man, I get that completely. There's so many words that there are. So I'm excited to be here today because I want to help you guys. I always tell people when I go into their businesses, I'm here to steal from you. I want to learn from your experiences so I don't make the same mistakes. That's the same thing. I'd love to help anybody go through that process so you don't make the same mistakes we did, and then it can be successful because in the end, we were very, very successful in the transaction. Thanks.
Thank you. That's a great experience. And just a caveat, we're not recommending multiple advisors and multiple attorneys. But you got a great education from that.
Absolutely.
Terry.
Okay. My name's Terry Smith. I live between Maine and San Diego and then travel to a few other places here and there as well. So I jokingly call myself a lifestyle entrepreneur. So I can barely answer the question of where do I live when people ask. My background started out a bit differently, actually. I wasn't in private equity. I worked at a large law firm. I then worked as an in-house attorney for Bank of America, and then as a chief operating officer for an engineering firm. So in that sense, I've done a little bit of everything. In 2018, I helped to restructure that engineering firm, and we ultimately sold it to a private equity purchaser. So I was sitting on the other side of the table at that point. learning exactly what it is that a business owner goes through. So when we talk about the emotional ups and downs, which you'll see in my quote there, I've seen that firsthand. And then after we sold that company, I thought, geez, what am I going to do? I know that I'd like to be an investor, but it's not something I really had the capability to do on my own. So enter Eric Willis, who's in the front here. He's my business partner. Yeah, we've known each other since we're about 15, 16 years old. He's been in private equity for 20 years, worked at a multi-billion-dollar fund, and growing up, he is the guy who literally on the CPA test would figure out what answers and questions were wrong, and he would write the people in to correct them. So that's the level of numerical OCD that is perfect to pair with a lawyer and more of a concept person like myself. And so I have to give him the credit, really. Anything that I've learned over the past 5 years has been as a result of him teaching that to me, because we work together every day, day in, day out. Our business has now evolved to where we use typically our own capital. We've had some very good successes doing this together. So first and foremost, I'll thank him. But that's my background.
I didn't get that on video. Can you do that?
Great, thank you. Kip.
Good afternoon. My name is Kip Ritchie. I am CEO of Potawatomi Ventures. I've been with the organization, 23 years, and working for the tribe for just under 30 years. I have a unique family legacy. My grandfather was a tribal chairman, and my great-grandfather was a tribal chairman, and my great-great-great-grandfather signed the Treaty of 1833, which ceded all of our land to Chicago. So I have that as part of my history. But it's exciting to work for the tribe. We are the economic development arm of the tribe, so everybody's familiar with the casino operation. We are separate on purpose. We were established about 23 years ago to diversify the tribe's holdings. So we operate a lot like a family office, and I'll talk more about that in a little bit, but we have a separate board of directors that govern us, but we have our own management team. There's about 750 employees in Wisconsin, throughout the state of, throughout the country, and then our revenue is just under $500 million. And we also, the board is appointed by the tribal council. So you can imagine me not only having one, but two boards to work with. So you can think about that for a minute, what that's like. But we're very fortunate to have the support of the tribe to go out and invest. I started my career in marketing and business development, and really it was when we started this organization that I learned most about M&A, and we've done over 10 acquisitions through those years and have had a number of startups and other things, and it's really been a great run. So I'm grateful for that opportunity, and glad to be here.
Thank you. Blake?
All right, thank you, Ann, and thank you all for supporting this great event. I'm Blake Knickelbein, shareholder with Reinhart Law. So as you saw Marty introduce us, we're a full-service business law firm. My practice, I'm in our corporate group, so half of my practice is mergers, acquisitions. The other half is acting as that trusted advisor for local businesses. So in my M&A practice, we work on both buy-side, sell-side transactions. We work with large public companies. We work with private equity firms. Also work with your local closely held businesses. And I think we have a unique perspective being on both buy-side and sell-side. And you realize, even if you have sophisticated parties, emotions play such a big role in transactions. And I think it's something we'll share today. But yeah, look forward to sharing some insight with you. Thanks.
Thank you. A lot of great experience up here. So this time last year, beginning of 2024, we were all up here projecting a record M&A year in 2024. We thought it was going to look similar to 2021, and I'm here to tell you that we were wrong. What ended up happening is Q3, Q4 of 2024, things slowed down a bit. And deal volume was actually significantly below what was projected. It was better than 23, but it wasn't even close to 2021 levels. In addition, deal values remained flat last year in 2024. We saw indemnification caps fall to 19%, an average of 19%. They were running around 21%, so good news for sellers. The use of rep and warranty insurance, we saw that decline significantly last year for a variety of reasons we can talk about at some point. And then the use of seller financing and earnouts. That decreased significantly for deals over $25 million in transaction value, and it bumped up just a little bit for deals under $25 million in transaction value. So that's what happened last year, and now we're looking forward at 2025. We've got a number of factors that we're dealing with right now. We've got the general economy, we've got inflation and interest rates, government changes and the uncertainty that that's brought, as far as tariffs, taxation, different things. And then you've got a kind of a macro level of AI that's changing our businesses. So given all that, I want to turn to the panel and tee up what they think is going to happen here in 25 and going into 26 as far as the M&A environment. How are your businesses doing? Whoever would like to start?
Sure. Well, first, how are our businesses doing? Fortunately well, but I would say that they're coming off the sugar high, we'll call it. And this is not just us. We're predominantly in the outsourced manufacturing space. That's where we have the most visibility. That's the companies who contact us most frequently. Our peer groups also have portfolio companies there. And so that's the main theme. And sometimes it's difficult because a decrease can feel, like a decrease. But if you look at actually the spike that happened, we were all saying at the time, is this sustainable? So we think now we've gotten back to a place that is relatively sustainable. As Ann was saying, some of the things going on, obviously, we'll get to it, I think, but with the tariffs, for example, we still have that question mark. We're always a little bit nervous. What's going to happen? Luckily, our specific business seems to be pretty well insulated. But in terms of other people's businesses, those that we might be willing to acquire, we're scratching our heads at the moment saying, gosh, we just don't exactly know what to think about that. As far as the general economy goes, hey, we know about as much as you do, right? We read the headlines. So I think the consumer confidence seems to apparently be going down a bit. We think that no matter what happens, there's likely to be at least some short-term volatility, which obviously makes people, a bit nervous. And that's about the best I can do. What do you guys think?
Yeah, I'd echo that. It seems like business is stabilizing a bit, and as you mentioned, we were up here last year, and everybody thought 2024 was going to be an incredibly hot year, and I think it picked up a bit, and looking at, I think all the macroeconomic studies say the M&A market in 25 is going to continue to pick up. Well, who knows if that's true, but something we find, again, working on every level of the market, sometimes the smaller transactions are almost insulated from the broader market trends. If you're a good business, if you've done that, as Lisa mentioned, if you've done that analysis on yourself before you go to market and you're an attractive business, there will be a market for you. So, sometimes we just find that transactions are sometimes just immune to the larger market trends.
Great. Yep.
I would say that, we're still bullish, right? We still plan to transact in the remainder of 25 and into 26. The way we're structured, we're sort of a four-legged stool, right? We have a large federal government contracting practice. We have commercial businesses, a real estate portfolio, and then passive portfolio and venture capital. And we see opportunity. This country is resilient. There's, as we look at our overall performance, things are still good, and we're still seeing a lot of activity. So we're being bold, right? And we still think that that's a good footing. That's a good way to have optimism, but measured as well, right? To keep things in perspective. We're not going to be ridiculous, but we're going to look for opportunity. And throughout I would say throughout the past few years in particular, that served us well. So there's volatility, no doubt, but we're gonna continue to be opportunistic. So.
And what do you see as attractive industries right now?
Why not? For us, basically, it's things that we think have the ability to maintain high margins even under pressure. So, for example, aerospace, certain defense companies that do very difficult to engineer, complicated products. Those are things where we think the valuations are still sustainable for sellers in particular. And those are the type of businesses where you have to wonder less because it's a bit easier to understand that the demand will be there. And it's very, very difficult for those type of businesses to be supplanted by others. So that's just an example.
Yeah, so we're seeing a trend at least in private equity, of private equity firms aggregating professional service firms into one portfolio. So think of your regional accounting firm, your regional investment advisor firm, and we're seeing pretty high multiples in that industry. So, just in kind of my anecdotal experience, that's what we're noticing.
Great. Well, let's turn the discussion and go a little more micro. So, Jerry, you made the decision to sell your business. What were the key factors? What did you think about? What did you consider when you made that decision?
So age was the number one factor that was there. 30 years into something, it's a successful business. I absolutely loved. I went to work every day and loved what I was doing till the day I walked out the door. But the reality is you have to have a plan. That's the investment that you have, that you build all that wealth in your company. And so it's trying to find then the reason. So the reason was simple. It was age. How do we make a transition? And you also have an emotional connection to it. And so then it's what's the best way to go? And we looked at, like I said, our kids. We looked at our management team. We looked at an ESOP. We looked at strategic partners, and ultimately, our broker helped you, but you still want to find the best price that you possibly can for it. So it's a trade-off of all of those different factors that come into it. The other challenge that we had is we're very much a niche business. So there are no comps that are out there for us as we were looking. So in order to establish a value was very, very difficult. So all of it, every piece of that, whether it's your kids, whether it's your employees, whether it's selling strategic or private equity, each of those has an emotional attachment to it that in small business is probably the biggest challenge that you have to get over. And removing that and turning it into a business decision, just like what you did every day when you're coming in, is the trade-off that you have to have.
Great, thanks. And we have a question from the audience. Arthur?
Yeah, it actually follows up on what you were just saying, Jerry. We've had a lot of talk about strategic partners and private equity. The question asked, has anyone explored ESOP as an option? If so, what were your takeaways? Why did or didn't you go that route?
Are any of you experts on that?
So, I can speak a little bit, but then interested to hear kind of your analysis on it. And so, when we're meeting with a company or a seller who is at the same position you were of, hey, I've owned this business for 30 years, what do I do next? And we always look at it, there's various alternatives. On one end of the spectrum, you are engaging an investment banker and running a full auction process. On the other end of the spectrum, maybe you have a couple kids in the business or a couple of key employees that you're looking to transfer to. And somewhere in the middle there is an ESOP. So it's, I want to keep my business within the employee group, but maybe I don't have a select few employees who have the capability to buy my business and maybe run it themselves. So the ESOP is kind of that middle ground approach. And then, your business it's employee owned, but it's owned by this separate ESOP, a trust, basically a retirement account that solely invests in your company. So it's, we kind of see it as that middle ground approach that is very attractive for many businesses.
Yeah, and at Taureau Group, we've actually run parallel processes with ESOP and auctions, and we don't do ESOP development, but we can certainly, whoever asks the question, we can get you to the right experts who can help you with those ESOP questions. We do a lot of ESOP work.
And I would say, at least look at it. ESOP's an incredible tax advantage that occurs with that. You can keep the ownership of the company within those employees who you care about, but it also takes time. You're also taking those risks. If you do an ESOP and finance it that way, and then tariffs go up by 25%, you still have that risk. The value of selling the company is I got a check. And when tariffs went up 25% on January 20th, that didn't bother me anymore. If it had been an ESOP, I'd still be involved in it. But it absolutely is another avenue that you want to look at, particularly if culture and employees are important.
Great, and for all the sellers who are out there and looking at the stage and saying, Jerry looks really happy and he sold to PE, how do I position my company to be attractive to private equity? Terry?
Yeah, that's a good one. And really quickly before I do that, on the ESOP, what I'll say is this, having been on the other side of it, it very often comes down to whether an owner is willing to retain any risk, because very often the company doesn't have the cash on the books to just buy all of the stock from the owner, so they have to take a loan for that. And if the business doesn't do well in the future, that owner's stock might not get paid for. So very frequently in practice, that's for whom it may not be that good, and for the other reasons everyone else has said, it can be very good. So it depends. In terms of positioning to be attractive to private equity, I would say for us, being a small shop, you have to court us a little bit, make us feel special. And the reason that works is because, we're often in the area I mentioned, right, outsourced manufacturing. So we know a lot about those businesses, we know the ecosystem, and we can quickly evaluate those businesses. And so when we get that phone call that says, look, we understand you're in this area, we'd really like you to take a look at this, we'd think you would like it, and we are not feeling as though 50 other people have gotten that phone call, then we're going to engage a lot further. So a lot of this too comes down to, and people don't talk as much about it, the personal aspect. At the end of the day, all of these complexities and contracts and things that you're doing, while important, you're still doing a transaction with a human, not a piece of paper. You could have potentially 10 buyers of your businesses giving you the exact same economics, all else equal, and you can have 10 very different experiences. And so often I just tell people, look, if it feels right, it probably is. If there isn't a fit there and you don't feel good about it, don't do it. Very frequently, that very simple advice is good. And we as buyers have the same exact thing happen. And it's happened now every time when we thought, gosh, so-and-so seems like a real beep. Usually that's how it turns out. So.
And for the sellers out there who are sitting there thinking, I believe Potawatomi is my best buyer, what can they do to get your attention, Kip?
Oh, it's great. So we're really mission-driven, right? Our mandate is to grow 7 generations, right? We're the first generation to do it. So what we do, the strategic piece of it is so important. We need to build capacity, capabilities, infrastructure, business acumen. So the whole professional services space is really intriguing to us because we found that to be a successful space for us to work in. But the transfer of leadership, right? So being able to help us with that intellectual property to lead and have the autonomy to lead and stick around after the sale is done for a little while is really important. That cultural alignment to buy into the mission of what we're trying to do, I think is a big deal to, I don't think we're quite as corporate as what we heard earlier with 10 meetings and PowerPoints, but we're probably not too far from that. But I think we really try to give our operating companies the autonomy to go out and really be successful, and we want those leaders to be really strong. So if somebody's coming in to our organization, believing in our mission, being willing to invest in our team and be coachable, teachable, teach us is really important.
Great. Now, Kyle and Lisa talked about creative legal solutions, which are always helpful when you get into a bind. But in advance of that, from a legal perspective, Blake, what should companies do? What should they be thinking of if they're getting ready to go to sale?
Yeah, so going back to Kyle and Lisa, as they said, once you engage with a buyer, we're going to ask you 500 questions. We're going to put you through the ringer. Once you've gotten to that point, that buyer is going to uncover every rock, kick every tire. So if you're able to do that yourself years before you're looking to sell, it can really strengthen your position because nobody knows the areas for improvement of your business better than you. Nobody knows your pinpoints, your soft spots better than you. So if you can get those 500 questions, do your own internal analysis, and determine what is a buyer going to focus on, and can I make changes now, years before I'm going to sale, to improve my marketability, and doing that well enough in advance so you have a couple flows through the financial statements. So you can make those important changes and have it show up where the buyer can actually see the effect of those changes you made.
So Blake, tell us, what was the most unexpected thing you've encountered in an M&A process?
Yeah.
Or stories?
Well, there's a lot of war stories. I mean, I think I'll go back to just how critical emotions are in a transaction. And kind of, Jerry, to your point, deal fatigue is real. And I know that now has been thrown out a few times, but what I always try to do at a beginning of a transaction when I'm working with a seller, sit down, have a very honest discussion of where do you want to go? What alternative is best for you? Again, you have various alternatives to transfer or transition your business. What are your goals? What's important to you? And let's choose what is the best alternative for you. And then once we're in that transaction, once you're getting beaten up, once deal fatigue has kicked in, I've had multiple conversations of, not that you can't change your mind, but if you recall, you believe this is the best alternative for you, so stick with us. Hopefully you have trusted advisors who you appreciate their counsel, and they can help get you through to the closing, because again, deal fatigue is real. And there will come times during any transaction where you feel like, is this worth it? I don't want to keep doing this. So if you still realize it's the best choice for you, just you got to get through it, and hopefully you have some trusted advisors to help you get to that closing.
Great, thank you. Jerry, what was the most unexpected event that happened during your process?
I hate to be redundant with what it's saying, but we had that deal fatigue. We had where my partner dropped the mic 2 days before closing because he didn't agree with part of the legal document that was there, and you're just so drained by that point in order to go forward. But so it goes back to, before you start the process, set what your objectives and what your goals are, and if what they're when you get to the end of the deal and going through the details, if it doesn't impact that, don't sweat it. You're still going to sweat it, but keep moving forward. If it breaks if you set, this is what my value is, and I'm not going to go below that, and they come back 2 weeks before and say, okay, we're going to put more in earn-out and less in price. If that's below your number, walk away. But if they come back and said, well, we're going to twist something this way, or we're going to go into your IT system, if that wasn't one of your primary goals, don't sweat the deal on it.
Thanks. Any other war stories to share?
Well, how about this? So one point that Blake made, which is 100% correct, but applies as well to one's internal financial staff, accountants. It's basically that notion that, get your ducks in a row early because no one knows your business better than you do, with one exception. When it comes to the finances, Eric here will know your business better than you do. And once he comes, I can protect you only so much, but we just recently had a situation, in fact, which is a business that we wanted to purchase. In fact, we probably still do. And when Eric gets in there to the nth degree, where I even said, "Gosh, do we really have to do this?" And he said, "Yeah, we do. You'll see why." We found out that the company's earnings are about half what the company and its advisors believed them to be. And it wasn't a nefarious thing. It was actually just embedded pricing errors that not even the largest, Fortune 500 company or whatever their size is knew about. And so it really is critical that you understand these things to a level that you wouldn't think possible, because private equity, they're professional investors to a very high degree, and they don't come in with the biases and familiarity that you might have. And so you really have to understand that.
Yeah, I'd call that a bad day. Yeah. Okay, let's shift gears a little bit. Lisa talked about strategy and how important strategy is to Generac. So on the buy side, Kip, what's important to your acquisition strategy?
So I mentioned a little bit earlier about our mission, vision, and values, right? And for us, we really want to try and utilize our tribal advantage as much as we can to diversify the portfolio. That's really, really important to us. Again, because we have such grand plans to grow, and then creating opportunity, right? Part of our mandate is to create job opportunities, internships, scholarships, to really build out, our professional portfolio, and to bring some of our younger tribal members into the organization, right? So we really think a lot about those things when we approach a transaction, I think that's key. So when we're going through that process, to again make sure there's alignment around that and people understand that that's what we're trying to do, because we really want it to be, equitable for everybody, right? We realize that there is going to be an exit for these leaders. They don't want to stay in the business forever. But again, to really understand where we're coming from is really important. So.
Great. And from a buy-side perspective, what are maybe one of the one or two things that you absolutely, positively have to get right in an acquisition?
That's a hard one. But, for us, I'll just say, number one, picking the right capital structure, that right amount of debt versus equity so that the business can perform the way that we hope it will and we can get, a good return. I would say from a large picture perspective, that's super important. You don't want to do that wrong. But probably more important than that actually goes to the last comment I made, which is choose the correct people. And typically, transparency is very helpful, because that way we understand what a particular owner is trying to accomplish. And it is not always the obvious answer, which is get the most amount of money. That's not always the case. Some people have been burned before, so certainty of close is extremely important. Other people want to know that we truly will keep their employees engaged. What tends to work for us and where we typically win deals is when the principals like dealing directly with us. They don't want a lot of layers of management. They don't want us to have to go to a board for approval. It's literally, we just get on the phone and say, yes, we'll do it, no, we won't. And so that tends to work for us. And if a seller will just tell us what they want, tell us what they think some of the challenges in the business are, then we're very likely to engage and potentially be able to resolve those. Versus if we don't know and we're left to guess, then it doesn't go as well frequently. So that's what we find for us works.
Great. And we've got a question from the audience, Arthur.
Yeah, it follows up, Terry, on some of what you were saying. The question is, how do you convince buyers that private equity, and specifically you, are the right buyer, being that PE can sometimes have negative perceptions around protecting a founder's legacy moving forward?
Yeah, this will touch on again what I just said. I mean, for us, credibility is everything, because what you may not realize as a seller is this world is very small. We've done business with people on the stage here, and not only as a buyer, but we then flip hats when we get to a point where we're going to sell a portfolio company. It's the exact same group who's going to help us do that. So there's no secrets. I mean, we know people's personalities, and you know who might be a fit. You also know which groups may have a reputation for putting forward a very high initial price, only to then whittle it down, versus others don't do that. So again, for us, it's focus. When we talk to a outsourced manufacturing owner with a business in typically the geography close to where we are now, of a certain business size, that's just what we do. So we can then point them to other owners from whom we've purchased, and so forth. So for us, it's really not that hard because we're not spread very thinly.
And to follow up on that, I think private equity gets a bad perception of, hey, they're going to come in, they're going to fire all my employees. But that's not our experience, because usually, Terry, when private equity firm is buying that, they're not going to manage that business. So the management team and the employee base is incredibly important, typically, to a private equity buyer. So, and I think, Lisa touched on that sometimes private equity leads to more opportunities for your employee base, where a strategic buyer, they may have redundancies in those employees and looking to integrate your business. So I don't think that perception that private equity is going to come in and fire my employees is an accurate one.
That came from, by the way, like in the 80s when, KKR, RJ, and Nabisco were doing, huge leveraged buyouts. That's actually, if you read books on this stuff, that's where that perception came from. And it is couldn't be further from the truth. As a matter of fact, the last probably few years, if any problems we and many of the business owners have faced, it would be finding enough qualified employees. That's been our bigger problem, not the redundancies. As a matter of fact, we haven't even gone through that in 4 companies that we've owned. I mean, we've always tried to hire more. So you're 100% right.
And if I could just add to that from the seller's side, it does feel sometimes like the buyers, especially private equity, is just looking at the numbers, but that's what they do. Don't forget you have power as well. They want to get the deal done just as much as you do. And so one of the tools that I found very, very helpful was, hey, can you give me a list of 5 owners that you sold to 2 years ago, 5 years ago? I want to hear how it went, and make sure that is consistent with the comfort that you have. If they aren't going to give you names, that's a bad sign. I never had anybody who didn't, and most of the buyers you talk to, are very, very honest, and whether they liked it or didn't like it. So it's a good way from a seller in order to kind of vet the private equity side.
Yeah, just to add to that too, I mean, the ecosystem, you have to understand, there is a symbiosis. It is not a zero-sum game. That's not how it works. So in the end, when you say what is private equity, they're just different forms of investors. That's all it is. And so when you have companies whose owners need liquidity, there is a natural fit there between what's trying to be accomplished. Now, there are many different flavors of it, but ultimately, really working together to, grow the pie, if you want to use that overused term, that really truly is how it works. This isn't, buying a used car where it's a one-time transaction and one person's, win is the other one's loss. It is not true. This is just not how it works.
So Jerry, as you went to market, how did you put together? You had to hire an attorney, a CPA, an M&A advisor. How did you go about choosing the right team?
Great question, and some of it is trial and error. I mean, it comes from a long-term relationship with your bankers, with your attorneys. We put a board of advisors together, and that's the beauty of Milwaukee. it's just a big, small town. Like somebody here had said, everybody knows everybody. And so it's not something you do when I say, okay, I'm going to sell my business. I'm going to start putting that together. No, it goes back farther than that. My empathy goes out to any sole proprietor. I was blessed to have partners through most of the time, and one partner in particular, who I could go into his office as you start talking about this, because kind of Lisa talked about how, if it's just one person, how you get that. If you have nobody else to talk to, my wife is wonderful, but she's not going to help me make that business decision. So it starts with make sure you have somebody. If you're a sole proprietor, have somebody that you can be completely frank and open and honest and go through what all your fears are. But to me, that goes with having a great banking relationship. We never had an attorney relationship. We were conservative and tried to do everything without attorneys. So we had to go and ask other people, who's the right ones? So how do we find a broker? By asking people who are the right ones and, interviewing them just like you're interviewing a new HR director or a new COO.
Great. And so I'd like everyone to answer this last question because we're almost out of time. Time flies when you're having fun. So with 2020 hindsight, what one piece of advice would you give someone in the audience who's looking to buy a business or someone in the audience who's looking to sell a business? What is that one piece, the most important piece of advice that you would give? And Blake, we'll start with you.
Yeah. So, I guess 2020 hindsight, any business had 10 potential buyers. We're not in that market. So kind of going back to what I said earlier, to do that investigation on yourself before you're going to market. Are you too heavily dependent on one or two customers? Are you too tied to one supplier? Because once you get engaged with the buyer, and it might only be, you may only have a couple interested buyers, and once you're engaged with them, if they find it out, as Kyle mentioned, if they're in a technical meeting and then they find out your soft spot, there may not be time to correct it, so you may have lost one of only a few potential buyers you have. So with 2020 hindsight, I think it's even more important to make changes, make improvements years in advance before you're going to market.
Great advice. Kip?
I would say be patient. These transactions take time, and really take that time to go through that due diligence process and make sure that you really fully understand what it is you're getting into. We do have some horror stories from the past, but it was a great learning experience for us in terms of alignment and really what we wanted for growth. And there were some cases that was unrealistic. So really understanding that, having that honest conversation and being patient with the process.
Great. Terry?
Okay. Aside from the emotional roller coaster conversation we've all had, I think the single piece of advice I would give is hiring inexpensive advisors is probably the most expensive mistake you will make. Don't do it. Trust me.
It's common sense. Set your goals at the start. Maintain your integrity. It's going to be a roller coaster ride. Don't sweat it. If you're a seller, you've been in business your entire life. You've dealt with, crisis after crisis after crisis. Selling your business is the exact same, just a little bit compressed. Don't maintain your integrity. Enjoy the ride. It's going to work out the way that it should.
Great. Arthur, any more questions from the audience? Great. Well, thank you all for being here. Thank you, panel. Really appreciate it. This has been a wealth of information. I think you're going to be around during the cocktail hour. And if you have any questions, please seek out the experts here and talk to them. Thank you.